we've made money. I think that is very important. You've created wealth actually. Money is not the right word. Wealth. Look at the breadth. Hello. 1:4. Advanced decline ratio, formidable in favor of advancing. A lot of green, you can ignore the index. Frankly, index has not been the real marker of the market this year. Now, we can get into this whole argument once again, tail is wagging the dog, and that's never a healthy sign. But whatever may be the construct of the market is telling a very, very different story. BPCL, Adani Ports, ONGC, Reliance, Tata Motors, some of the stocks which are off to a good start. Pidilite. Are things getting sticky for Pidilite? No. All of us thought that Pidilite and that new acquisition of Pidilite moving into the lending business, something markets may not like, but who can challenge the wisdom of the market? I thought like this, brokerages are writing like this, Sumit and me were discussing in the morning, but markets are markets, they can continue to surprise you. Lupin, good numbers, impact may not be that large, and then Tata Motors, largely mixed actually. Tata Power has so many moving parts that you cannot take a month-on-month call, quarter-on-quarter call on Tata Motors, Tata Power. But from a market standpoint, it's not a number which is really getting rewarded or punished per se. Asha?
Let's first address the bad news. Bata numbers, while the Q2 has been largely below estimates, the net profits have actually seen a decline of 38%, but the market is willing to shrug that off. The stock is holding up higher. For BHEL as well, the EBITDA loss is only expanded, and there's been a revenue decline of also about 1.5%. GNFC too, the revenues downtick of nearly 20%, margin squeeze at 8% versus 12% of a comparable. So these are a couple of stocks which are in focus this morning. There's also Gujarat Alkalis too. The EBITDA is sharply lower, 80% no less. So a big crackdown coming in there as well. Nikun just flagged off the likes of Pidilite as well as Lupin. There's PI Industries though on the good news front. The Q2 numbers are above estimates. United Spirits, great set of numbers. Gross profit margins have risen to 80 basis points. But look at the street. That stock is still lower by about 1.5% as we speak. Although, to be fair, the entire liquor segment has been fairly buoyant. Radico, Khaitan and the likes as well included in that. Biocon is looking to divest two non-core formulations India business units into Eris Life Sciences. So Biocon, Eris, both those stocks are in focus. And there's Patanjali Foods as well, wherein the numbers have been impressive. So just bring up that stock as well for you on your screens right now. That stock as well holding up higher by 1% as we speak right now. So that's pretty much it when it comes to the newsmakers in trade. Also want to just check in on what some of the buzzers from yesterday are up to and where is it that they're actually holding up in trade. So just gonna cull that news list out. Just give me a second before that. Let's just see what the metals pack is doing, what private banking names are doing, considering they were the ones which were a tad bit of an underperformer yesterday. The likes of an ICICI Bank, Hindustan, Kotak, etc. were absolutely flat to red, and that's what kept the Nifty a little bit at bay. And I think today as well, that pretty much the same trend continues. So now yet again, it seems that banks are going to weigh heavy on the Nifty, right?
Well, yeah, I think more or less a similar kind of a trend like what we've seen in the last 3 days, banks underperforming. No major short covering data for the banking index. I think that's one of the major reasons why you would probably not expect banking stocks to fire up on an immediate basis unless there is a strong case of short covering for the bank Nifty as well as large cap stocks. In terms of individual names, I would focus on the real estate pack. DLF is something which looks fairly attractive. The stock has confirming a strong breakout in terms of momentum as well. So that's stock which I looked at in the open.
All right, that's DLF. That's on Kunal's radar. Meantime, Naresh, just checking in on the overall market open, the fact that we're at 19,400. What is your first mid-cap call?
So going with a large cap Hindustan Bank, that's a stock which has broken out. It's a small risk reward, keeping a stop at 1450 for the next few sessions and expecting a slow and steady move towards 1600.
Shocker, shocker. That was one of the stocks that I had pegged that is one of your favorites. So Hindustan Bank, that's Naresh's first trade, and Kunal, he's looking at a DLF. All right, meantime, we've got some top market veterans sharing their views on the channel. Ramdev Agarwal, chairman and co-founder Motilal Oswal Financial Services. Well, it's interesting because he draws parallels between the small caps and Anulom Vilom breathing technique in yoga. Let's listen in.
देखिए 10 साल के बाद मेरे मालूम है mid, small and large, all three will deliver the same number. आप लास्ट 15 साल का कर लो 9%, 10%, 8%. I'll tell you exact number. 15 years return, 8% index, 9% index, 10% for mid cap, and 8% again for small cap. This is a 15-year number. Go and check. But last 6 months, 1 year, it's mind blowing. I mean, like index has done 8%, mid and small have done 20%. So that excitement brings all the crowd into following. In fact, after 20% return, you should run from there and go to the large cap. Because large cap is going to do that next 20%. Not this. See, अनुलोम विलोम होता है ना, तो पहले आप इसके ऊपर can you breathe further? You have to first release.
Breathe out, yes.
So now mid cap and small cap had their breathing up. Now they have to breathe down. Large cap had done their breathing down. They have to breathe up. अब लेकिन बोलने में बहुत easy लगता है हमको, लेकिन करने का जो है ना, shifting the allocation there or sitting there is tough. So people who have patience, they will reap the benefits.
You know, that's a very interesting point that you made. You are feeling that froth in the mid and small caps, and I only ask because, you know, every day there is a new IPO. The market is broadening.
Yes.
You know, the small and mid cap space itself is getting so bloated.
Yes.
There are newer opportunities every day. So why would you say that this is the peak of mid and small caps
I'm
in the
not,
near
I am,
term?
you
In the
said.
near term?
I didn't say it is peak of mid and small cap. Who said that? There will be huge opportunity. It's of 3,000 companies, 4,000. If there are 3,000 companies listed, only 250 are the large cap. I mean, 100, 150 are large cap. Rest all तो आपका पूरा game ही mid and small का है. So the opportunity is very large.
Sure.
But when you say that the return from the category is 20-25%, then you know, buying at those level, you have to
Obviously,
be very. You need more
cautious,
care.
yes.
Because generally valuations are high in that segment, and generally valuations are cheaper here.
Rahul Chadha joins us. Let's say hello, good morning and namaste to him. So which part of the world are you joining us from? Last I heard that you've moved to United States, or are you still in Hong Kong?
Yeah, Nikuch, this is happy Diwali to everybody in the studio and all your viewers from New York. So I'm joining you from New York.
Wonderful. You've really stayed late for this show. So really thank you very much for that.
No, thanks for having me on show. It's always a pleasure to be with you guys.
Well, it's been a good year. And it's been a good year for, you know, it's just one of the years where the retail guys are saying that we managed to beat the fund managers. The small cap index has done 30% and the index index has given not solid returns. Market fund managers are positioned largely in IT and banks. Those are sectors which have underperformed. So really, I mean, on a lighter side, the retail guys are saying that this year we managed to beat the fund manager. Will you guys come back next year?
Yeah, let them be happy for a year. See, what we were focused on was on downside protection. And look, that is also a very important part of the game. So that is okay. As long as there is money in the market, people have made money in the market. That money will find way to large caps next year. So perfectly fine with the outcome.
Discussing today is a massive outperformance in PSUs, a massive comeback in small cap stocks, underperformance in banks, and a shaky year for IT. What are the trends you think we are likely to discuss same time next year when we are discussing the next Samvat year?
So if you look at rewind of what has happened over the year is we saw all this narrative of peaking of inflation which came through. We had Fed which was expanding balance sheet post the regional banking crisis in the US in Feb. And that's where we saw outperformance of mid caps in India. But clearly, if you see things are slowing down, the economic results which are coming out are a bit weaker than what was before. And we believe going into elections, as uncertainty is there, things are still going to slow down. So we would be cautious here. We've been cautious last 3-4 months. It's kind of played out in a way, and still be cautious here. Continue to be defensively positioned. And somewhere around March, April, as we get some clarity, more towards, I would say, April, May, as we get clarity around elections, as we get clarity that, look, we are closer to central banks coming and cutting rates and growth getting accelerated in the second half of 2024, we'll be taking a more kind of an, I would say, aggressive stance on market, moving more towards the cyclical part of the market. But right now, we would be a bit cautious here.
Okay. Why that caution though? Because, Rahul, there are not many available options out there, A. And the yield, which had spiked up all the way to 5 plus, that also has softened since. I mean, what I'm trying to say is that there aren't as many attractive bets as India within at least the EM pool.
I think that the challenge markets world over have is not from other equity markets, but from fixed income. I think you said it yourself. If you've got US 10-year giving 4.5%, and if you look at the yields in India, 7.5%, that's an attractive yield. And somewhere that sets the cost of capital for everything else in the economy. And that is going to take allocations from equities. Look, India is a great story, and we believe that India, along with US, is going to be the story to watch for the decade to come, which is why this market is going to be bought into every dip. But we've seen over the last 12 months, the market's not gone anywhere. Even with mid caps, if you look at post the high these mid caps touched in kind of a May, June, they've been fairly range bound since then.
Let's assume that interest rates, they have peaked out. Let's assume. Nobody knows. Even Fed doesn't know where rates are moving. But let's assume as market observers that interest rates, they peak out and they go down rather than they go up in next 12 months. Then what happens to the positioning of risk, flows, and also underlying valuations?
Okay. So what happens in the market doesn't have an appetite, I would say, beyond 6-9 months. Market is willing to look at, let's say, growth acceleration, things improving in next 6 months. But if it doesn't happen in 6 months, there is always this doubt that, like the way policymakers were behind the curve when inflation was coming back, are they going to be behind the curve when growth is slowing down? And sitting here in US, you see clear signs of growth slowing down. You look at the employment data which came through. So our view is over the next 6 months, narrative is going to be that, look, growth is slowing down and policymakers are still worried about inflation. And that's where markets would kind of correct a bit. But we would take that as a buying opportunity. Let's say, should the markets fall about 10 to 15%, that would be a buying opportunity, because eventually we're seeing demand normalizing. We're seeing the goods inflation going away. All this inflation which came in shipping rates has significantly receded. So eventually central banks would cut rates. Eventually growth is going to accelerate, and that is where you will see the earnings follow through coming through. That's where you will see the multiple expansion happening, and that is when you will get a true bull market. See, right now it seems like that we are making a lot of effort, but anywhere, and I think that scenario is going to continue for next at least 3 to 4 months before we break out of this range and go into another bull market.
Rahul, you were alluding to the fact that it's whenever, the FI money comes back to India post the election uncertainty, of course, it's going to find its way into cyclicals. What within cyclicals would you bet on?
So again, it's going to be industrials, which have done well in this cycle. What we've seen is a reversal of the trends of last decade. Last decade was China was the one investing. Everybody else was under-investing. Now, because of nearshoring, friendshoring, or all these infrastructure spends which are happening in India particularly, we are seeing a great kind of a times for the investment cycle. So industrials is something that should do well. We should see end of the underperformance from banks. Some of the other cyclicals like real estate would continue to do well. A big surprise this year has been, despite rates being high, real estate doing well, and I think that momentum continues. Outside that, autos, commodities would be ones to look at. I see they've been beaten down, and we've got a call on commodities, right? We were kind of bullish as we came out of COVID, but about 18 to 20 months back, we went negative that space. I think commodities is something we would constructively evaluate in next 5 to 6 months.
Avtar, we can talk stocks. No compliance. We can talk stocks.
See.
No. I'm right here. Caught you. तब राहुल चड्डा की दिवाली पिक्स क्या है जी बता दो जल्दी से लिख लेते हैं पेन पेपर रेडी है.
Okay. दिवाली पिक्स देखो ज्यादा चेंज नहीं हुई. I think बैंक्स आप चूज करो, चाहे आपको ICICI एक्सेस पसंद है. Hospitals, real estate is a space we've liked. Hospitals, Narayan, Fortis, Vedanta, these are the names. Real estate, you look at Prestige Sova, these are the names we've had in our portfolio, we've done well. Consumption should do well. I think consumption in 12 months from now should recover. We've liked Zomato. In fact, you would remember me for that, and that's been one of the amazing calls we've had. The companies really surprised us on execution, very positively surprised us on execution. So Zomato, some of these QSR space like Westlife are there. And then I think metals would be attractive contrarian bets. So look at Tata Steel, Hindalco. I think these would be interesting bets in about 5 to 6 months from now. So a lot of buy ideas. Buy ideas ki koi kabhi nahi hai.
What is the
And
Diwali?
it's on record. I was actually sitting spellbound that Rahul Chadda is talking stocks.
New avatar. Things change in his new avatar.
New
Okay.
Samvat, new
New
avatar,
Samvat, new
everything.
ideas, and new stock idea. That is important. So, what is the Diwali like in New York? What are you planning?
Diwali, again, we've still got 2 days for formal Diwali celebrations, but look, the house fully decorated, so you can see Delhi lights in New York. So this is one of the houses which stands out in the lane, and clearly the Diwali celebrations are full on here.
The chaat and all the yummy stuff from back home for sure.
Absolutely, absolutely.
Delhi lights in New York. क्या बात है? Punchline है. Delhi lights in New York. It's a nice thing actually to have.
Yeah, thanks everyone. Thanks for this, and wish you
Thank
again a
you.
happy Diwali.
Wish you
Happy
the same
Diwali.
and your family as well. Enjoy a cold Diwali this time, much unlike the East.
No, it's actually foggy Diwali this time in Delhi.
No, I'm talking about New York.
Yeah, okay.
Yeah. Anyway, let's move on. Let's address earnings. Let's figure out what's going to keep the markets going on. Where is it that you can track growth and where is it that you can see growth visibility? Let's welcome on board Ashwath Ram, the MD at Cummins India, joining in on the show right now. Ashwath, great to have you on the show. And firstly, festival greetings from all of us here at ET Now.
Yeah, happy Diwali to all of you and all the viewers as well.
Thank you. And it is turning out to be a happy Diwali, right? Your gross margins have expanded by nearly 500 basis points. What's aided this recovery? And you think these kind of levels are sustainable?
I think last quarter we had a perfect storm of good news. Commodities continued to trend downwards. We had a positive effect of mix. We sold lower numbers of low horsepower because of the pre-buy in the previous quarter. We were able to keep and manage some of our costs, and we were able to hold on to the price increases that we had done in the previous quarter. So all variables relating to margins were favorable. So that's why the margins were better. It's always our attempt to, keep up a higher level of margins. So it's probably not sustainable at this level, but certainly it is our endeavor to continuously keep improving our PBIT percentage year on year. We have a stated objective of growing revenue at roughly 2x of GDP and having 100 basis point improvement in margin year on year. And that's the kind of guideline we use to keep working on all aspects of profitability.
That right now there is a huge uptick in the private capex, and capacity utilization after a gap of many years has just kicked in. Do you think when you say that you will double at the growth of GDP, that could be a conservative number?
It could be conservative a little bit, but our growth is dependent on multiple markets around the world. So India could grow at even faster rates, but we are seeing slowdown in other parts of the world. And nearly 30% of our revenue comes from what we export. And so the variation there sometimes causes our growth rate to slow down a little bit. Also, we are in multiple market segments and not all market segments are growing at the same rate. And which is why a little more realistic kind of projection of what we can do. We have done better in the past, but if you say steady state, what is our aspiration to do? That's what it is.
Good to have you on board, and you are giving strong projections for the years ahead. But I want to know what the outlook is when it comes to exports, because that has been a bit of a stumbling block for the company. It's been weak. So are you seeing any signs of revival? Do you have any projections for where you'd like to see your export growth?
As a matter of fact, if you look at the last 2 or 3 years, exports have been steadily growing. And as of now, they have not declined very significantly. They're just plateauing out, and we are seeing softness in some of the global markets as of now. And it's probably caused by all the turmoil, geopolitical issues, Middle East crisis, oil prices, Ukraine. So it's a whole combination of things around the world, including China not coming back as fast. We do not expect that to decline significantly. We have seen previous cycles in exports where exports would drop even 30, 40, 50%. We don't see that kind of drop happening because we continue to introduce new products, and even if markets are slower, we are attempting to gain market share by launching new items into the export markets. But we do see some softness as of now, not able to clearly predict how long that softness will last, but we are working on all kinds of efforts to still show positive growth despite all the global softness.
In this entire energy transition, where a lot is changing, fossil fuel is becoming, is getting away, more efficiency has kicked in. Your mainstay of diesel engines, how will that get challenged? Is this something which is getting disrupted, and it's getting disrupted very fast?
It's certainly getting disrupted, and but it's not getting disrupted very fast. As of today, even for the global company, greater than 95% of our revenue comes from diesel and gas and similar kinds of fuels. We do see a transition. We have forecasted and we have committed to be a carbon neutral company by 2050, which is a destination we are calling Destination Zero. That's aligned to where the United States is going from a zero carbon emissions kind of norm. India has committed to go there by 2070. We think this is a transition which will happen in 3 phases. In the short-term phase, we're actually seeing the demand for diesel and natural gas grow, and there is consolidation happening globally, which actually helps a company like Cummins gain more share. In the medium term, we see multiple technologies playing, and Cummins has also invested in many of those technologies and is working on building up scale there. And in the long term, which we see 20, 25 years from now, we think some of these technologies will gain traction and scale. And by then we will be ready with absolute best-in-class market products to win in that space as well.
Why does Cummins have a subsidiary in India?
Cummins was set up in 1962. It was already set up as a joint venture, a public listed company, and a US owned entity. Somewhere in the late 90s, the company wanted to invest in some new technologies, especially a lot of IP related development, etc., was going on. And at that time, the norms on IP protection, etc., were not favorable from a global perspective, and so it decided to set up independent companies which could protect some of that IP for the parent. And also there were spaces like in the automotive space where Cummins India was never present, and there the path to market was partners, big partners like the Tata Group, etc. And so the Tata Cummins joint venture was set up. So there's not one really strong reason for why other entities exist, but these are some of the reasons historically why it has happened, and we have been trying to stick to the norms, trying to maximize the total shareholder return on each of the entities that are there under my supervision.
But great to have you on the show. Thank you so much for taking the time out and joining in today. On that note, we're going to take a very quick break. When we come back, we'll have lots of managements join in, but we'll start off our interaction with CAMS.
Back with first trades right here on ET Now. Just checking in on some of the movers then in the broader markets, and take a look at something like a Brigade Enterprises. That's a smart mover in trade, 6.5%. You've got a CAD which continues its up move. Some of these auto-anch stocks have really been on a smart trajectory. Soba Developers, yet again, real estate makes the cut, and you've also got something like a Maharashtra Seamless. That stock is up in today's trade. But let's move right on then. Lots of results to address. So we've got the management of CAMS joining in. Anuj Kumar is the managing director with us on the show. Good to have you on board, because it has been a steady set of quarterly earnings overall. Your margins as well have risen to multi-quarter highs at 44%. What is the outlook for the next 3 to 4 quarters? Will this margin trajectory only build up from here on?
Good morning, and thanks for having me on the show. So like I said, this was a steady growth quarter for us. Like you saw, revenues grew in excess of 13% year on year. PAT margin grew, PAT grew about 17%. Operating EBITDA, like you said, has been at a historic near best of 44% plus. The retail franchise in terms of participation of individuals and families in the mutual fund journey, I think has expanded quite a bit. Capital markets are experiencing retailization, and we play in almost every segment of the Indian capital market. So we believe that holding margins 44-45% in that range will continue for the subsequent 2 to 3 quarters.
The base effect now would be a challenge, because the penetration levels in DMAT in mutual funds, they are no longer minuscule. 10 crore DMAT accounts, 4 crore mutual fund portfolios. The SIP numbers now, I mean, they seem to be plateauing. Are we reaching a stage where margins will be intact, but your growth because the base will get challenged?
The first thing that you said is indeed right. The base has expanded quite a bit. I think the opportunity lies, and if you see the mutual fund markets, about 4 crore unique investors, I think gaining a serious share in those 4 crore wallets is perhaps the first priority of the industry, because a lot of those people have tinkered with mutual fund investment but haven't given serious monies. And at 4 crore families or individuals, the headroom to rise and bring in more investors, I think, continues at a very steady state. So historically, you've seen AUMs grow about 18%. We believe that they will continue to grow mid-teens even in the coming years.
How does your business model evolve? I mean, as size increases, do you get benefits of leverage? Because your infrastructure, you don't have to spend a lot, but you will get a lot of benefits because you're, because you will add new clients. How does it work for you?
We typically grow with the markets and with our clients. And when we add new clients, obviously we gain scale, which is an important component of our growth. If you see in a typical quarter, we would take maybe about 60 to 70% of the incremental revenue to the bottom line because of the levels of automation, digitization, and straight-through processing that we've achieved. So to that extent, there is a component of leverage in the overall business, which will continue to show as revenue scale.
Anuj, since you did touch upon client addition, you added about 15 clients, as I understand, in this particular quarter. Any marquee names? And then what kind of client addition are you anticipating for the second half of the fiscal?
So in the last 12 months, if you take mutual funds, there was a queue of people who wanted to get in. We acquired amongst these, you saw Zerodha, you saw Helios, Angel Broking, and Taurus Oro. Those are the 4 new clients that we got amongst the new applicants. And then Navi was kind of an addition which migrated to us. The frenzy to join up in the mutual fund bandwagon has slowed a little, which means there are not so many new applicants now. So we believe we should have 1 or 2 other wins in the balance 6 months. The 15 that you referred to are clients in the alternative space, which is private equity funds, PMSs. We believe that momentum will continue. We will continue adding 15 to 20 new clients on the alternative side every quarter.
AI arm. So just give us a sense as to what kind of growth potential we can expect here, and how are you looking to really leverage that opportunity?
So we've stated that we expect to be 15% earnings compounders. At a broad level, our MF business should continue growing early teens, 12 to 13% revenue every year. Non-MF, which you saw, grew 47% year on year, largely on the back of one acquisition, which is Think 360. But on a steady base, non-MF grew about 30%. So we believe that revenue growth of about 15%, earnings growth in the same region or slightly better, is quite possible in these markets, which is what we are aspiring to achieve.
How much market share do you have in this entire segment of registry plus mutual fund management? What's your market share?
Mutual fund market share of assets is in excess of 68, so it's holding at about 68.5. Alternatives of the outsourced part, we occupy about 50%. If you take the insurance repository market, we are at about 40%. So those are like three marquee businesses where we are holding share very well for the past several quarters and years.
About your biggest market share, which is 68%. Given that what we've heard from SEBI and what mutual funds in a sense are trying to do, they're simply trying to bring their costs down. The regulator has said the costs have to be going down, and mutual funds are telling us that it would be a function of registry charges, maintenance charges, and distribution cost. Do you think your business from mutual fund, while the business will be large, but the spreads will start narrowing down?
We believe, like I said, we believe we will hold margins. I think we made all the right investments in automation and technology. Our prices are telescopic, which means mutual funds in every subsequent year are buying it slightly cheaper. And if you see a 50 to 60 bips P&L that mutual funds run on, registry charges are typically about 3 bips out of that. So we are about 5% of the overall pie, a very small fraction. So while we continue giving some remission in prices, we believe, and that's continued for the last more than 10 years, it's more than a decade-old story, we believe we will hold margins or improve them slightly from here.
How is the business model structured? Do you get benefits? Do you make revenue stroke money only for maintaining demat accounts, or if the transaction value increases, you will also be getting benefits because of that? I'm just trying to understand here.
The essential fodder for the business is assets. Okay. Assets grow when net sales go up. Assets grow when mark-to-market gains happen. When you club these, that's the 18% annualized figure that you've seen in the last 10 years. So we charge as a percentage of overall assets. So essentially, so long as assets continue growing either through sales or mark-to-market, that I think adds overall momentum to our revenues.
Say that CAMS is nothing else, but it's a bet on India's financial inclusion. As India will progress, they will have more demat accounts, more mutual fund accounts. The assets under management will increase. The size of demat accounts will also increase. So can I say that CAMS is nothing else, but it's a bet on India's financial inclusion growth?
That's exactly the position we've been holding. We are saying that we are a bet on overall capital markets and financial inclusion. And as retailization happens, like you've seen over the past 10 years, this trend will become deeper and deeper. So absolutely, you're spot on. That's really how we project ourselves and want to be looked at.
Almost a duopoly market, if I may say so. Only two large players. And that's where, when you are in such a good business, the disruption and the challenges, they come in. And given that what fintech is doing and what others are trying to do, is that a real risk that the monopoly which you enjoy, almost a duopoly what the sector currently seems to be enjoying, that will be threatened?
If you see, this business is very easy to get licensed in. It's an easy to get license, so not restricted by license. There were several players, over half a dozen till about 15 years back. A number of them fell off. When you see fintechs, they're trying to solve a single problem. They're solving an onboarding problem or a customer service problem or a payments and settlement problem. While our work spans the breadth of the markets, the liability side, operations work is all done by us. So we believe that it takes about 20 to 30 fintechs to come together to even think of executing the scope we execute. And therefore, the moats are large and it's not very easy to replicate this business.
Boa, thank you for taking time out and joining in. So that's the management of CAMS talking about a 15% revenue growth, some headwinds for client additions in the next couple of quarters, but they have expanded the MF industry base as a whole. We'll take a quick break. Don't go anywhere. The management of Idea Forge Tech joins in to talk earnings when we return.
Back with first trades right here in ET now. Let's just revisit what the first trades are settling in at. We will, of course, have the Idea Forge management as well join in just a second. 19,500, that's where we're currently at for the Nifty futures. Absolutely a flat day, 19,416 on the spot Nifty. PFC, that's shot up about 5% as we speak right now. Apollo Tyres, after its earnings, has been seeing a huge bump up, and that continues today too, another 4% higher there. Bata, incidentally, came out with a weak set of numbers, but the stock is holding up 3.25%. There's also M&M, which is dashed up 2.25%, and then REC also, which is looking strong by about 3% as we speak right now. But let's discuss earnings. Ankit Mehta, the CEO at Idea Forge, joins in on the show right now. Ankit, hi, good morning. Good to have you on ET now, and wish you a very happy Diwali, first of all, from all of us here.
Thank you. Same to you guys. Thanks for having us here.
Okay. Ankit, walk us through how your quarter has been, because from what I see, there's been a revenue dip of about 41% on a year-on-year basis. What's led to this kind of degrowth?
So, I had mentioned this in our previous calls as well and during the earnings call, is that, our revenue is largely determined by the delivery schedules that we have with our end customers and their, processes in terms of when they want the deliveries. So largely last quarter has gone into building the necessary inventories for some of the orders that you see in our order book. And whatever deliveries were due in the quarter, we have been able to successfully deliver them, and we are gearing up for the other set of deliveries.
Okay, so tell me about your order book, because from what I understand, it's currently at about 253 odd crore rupees. What is the time frame within which all these orders are going to get executed, and what's the delivery pipeline looking like for the second half of the fiscal?
So the orders that we have received in the previous quarter, typically most of our orders come, particularly the long-term orders, come with a delivery timeline of about a year or so. And therefore, based on the delivery schedules that are mentioned within the contracts, we will be delivering them. Some of the deliveries will happen prior to the end of that 1 year period, but some of those deliveries will happen closer to that as well.
Right, okay. So just give us a sense as to which segments the orders are coming from and what your client confidence is looking like.
So, a lot of our orders are coming in from the defense sector, which we have mentioned in the key orders that we had released also and informed the markets about. In terms of, overall mix, if you see, in the last quarter, we saw that the civil part of our business had a better contribution than it was in the previous quarter. So that ways, the civil opportunities are also picking up in terms of pace towards the latter half of the year. However, we have to be conscious that, the defense opportunities are much larger and more chunky. So therefore, whether the percentage will play out in the same way or not is something that we will have to see based on the closure of opportunities and deliveries in this next 2 quarters.
When you say your order book has to be measured or revenue has to be measured in the way how the deliveries are done, so is there a pattern which could be at play that first half is better than second half is better than first half, or it needs to be viewed independently?
It has to be viewed independently, because if you see like even the Q1 and Q2, the consistency is not trackable Q on Q and year on year at this point in time. What happens is, and the particular reason for that is, for example, we get an order where we have to make a chunky delivery where the entire order, and it's a large order, has to be made in a single shot. So we have to prepare that inventory for a decently long period of time. And once the inventory is prepared, we have to invite the customer for inspections, and then the deliveries are made to the end customer. So, wherever there is a order where there is a larger chunk to be delivered in a single lot, you will see that lumpiness, and therefore, depending on each opportunity and how the customer has envisaged their deliveries, things do end up being a little lumpy and slightly less, predictable in the short term, particularly when the overall size of the business is as where it is today.
Your space is exciting, but it's a space where every week, forget every week actually, every alternate day, I get a company which is entering into drones, which perhaps seems to be, doing something different. It's a very high growth area, but everybody wants to have their, presence in that space. So how would you be ensuring that you remain an innovator and you're not challenged by the current disruptors?
So what happens in the space is very interesting, right? And I have mentioned this earlier in the previous times when we were looking at explaining of what the nature of the business is. What happens in drones is that you have drones of many categories and many types. Like, for example, there is a drone that you can use to spot a adversary in a house that is probably right in front of you, maybe 100 meters away. Then that same house, let's say, for example, or the same target has to be looked at from 5 kilometers away also, because before you get to 100 meters, you want to have intelligence that the what is the actual status on ground, and then that same asset has to be looked at times from a much larger distance away, and sometimes to even identify that this is the target that we have to track, you have to look at it sometimes from many hundreds of kilometers away as well, where the takeoff location is. So depending on where and what is the operational scenario, a lot of changes happen in terms of the equipment, the size of the equipment, the nature of the asset. For example, there are assets which are like kamikaze drones, where the asset itself as a drone goes and attacks a target. Then there are platforms that are looking at dropping the munition, particularly in a defense scenario. So there is a fairly wide range of applications for which drones can be built, and then civil side is an even larger category of drones that can be required, because there is mapping that has to be done sometimes with the LiDAR, sometimes with multispectral sensors, hyperspectral sensors. You're doing regular mapping, you're doing delivery operations, you're doing spraying operations. So a fairly diverse set of applications exist. What we do at IdeaForge is we pick particularly large operating segments within this, where the core strengths of our business, which is building high performance, reliable, and autonomous drones, plays really well for the customer's requirements and needs as well. We tend to play on those sectors, and in those sectors, we tend to build systems which are world class. In most cases, we have products that have performance numbers with respect to certain specifications better than anybody else out there. So we are defining what benchmarks have to be set for those particular categories, and that's where we excel. And a lot of our innovation, the patents that we file, goes in the direction of pushing the boundaries of what's possible in many of those categories. And as we build new categories that we have stated as a part of our strategy, such as the tactical drone category, which is a new category we are building, the middle mile logistics drone category, the traditional strength that IdeaForge has also lends in very, very well with respect to those applications, and how our strengths in building the technology in this way will come into play there as well.
All right. Thank you for sharing with us your growth outlook as well as views on the company. That's the word coming in from IdeaForge. A little bit of lumpiness in the order schedule, but from the defense segment, civil, that is where they're seeing strong order opportunities. On the brink of 800 for IdeaForge Tech. Well, let's get a move on then and find out how you can really light up your portfolio this Diwali. In a special interaction, we caught up with Ramdev Agarwal, the chairman and co-founder at Motilal Oswal Financial Services. He spoke about the opportunity in large caps to even playing some of the ancillary sectors. Hear him out sharing his insights and strategies.
I think I think India in a situation like that, we don't have any major crisis, but something or other will keep happening. Here and there.
Some upcoming elections are very.
So वो कुछ ना कुछ होते रहेगा वो. मतलब election आएगा जाएगा सब कुछ होगा. And some challenges will also come short term. But corporates are doing very well. Businesses in general are doing very well. Inflation, interest rate, they are very stable. 50 basis point higher, lower, sab chalega. So I think in that stable environment, you go and do shopping. What you like, what you understand. Because businesses may not do well for 6 months, 1 year, or you might have paid overpriced for 1 year. But if you look at 5-10 year cycle, and if you're, I can't predict where the market will go, but probably I can understand where the businesses will go. And once we understand these businesses are going to do well, this particular company is run by good management, and this company has good future on a 10-year basis, am I buying reasonably priced? Because in a growth situation like India, when markets are very smart, so if you are paying, you understand the business and you are buying at a reasonable price, then don't bother about 10-15% decline after you buy. I think the real worry in the market for the most of the people is that the moment I buy, will it fall by 20%? I'm telling you, be ready for that 20-30% decline.
What you're seeing right now in the market play out is that at an index level, not much is happening. At large cap level, the blue chips of the mighty blue chips, nothing really is happening. The teji, as you say it, is really in the mid and small caps. That's where you can feel it in your pulse, that's where big gains have been made. Do you stick by with that?
Is
the alpha generation in the next 1 to 2 years with mid and small caps?
Most of the people, 98-99% people don't get the index return in the long run. Your objective should be to make sure that index return, at least they get it. So if you are there getting 4-5%, 6% in fixed income, by following the index, by buying passive and not bothering about the market, they'll make 13%, 14% plus dividend of 0.5%, 1%. So, ज़्यादा दिमाग लगाने काम नहीं, it is very simple. So if you keep it simple, you'll make 12-13%. In 6 years, your money will double. If you go to the debt route, that is the alternative. If you don't come here, then you go to fixed income. Fixed income will be 6%. It will take 12 years to double your money. And by that time, inflation itself will catch up. So you don't get anything. You don't create wealth. Here, at least you create wealth. So that is for you to make them understand. Because 1 lakh persons are coming every day. It's an actual responsibility of all the social media and particularly this mass channel like yours to educate to them. Absolutely. That boss, you have an opportunity, but do it right.
Yeah. But for those who are invested in equities right now, is there a tactical call that you need to take? You think the mid and small cap teji has just started?
कुछ ऐसा नहीं है. Nobody knows, I'm telling you. सब misguide कर रहे हैं कि ये करो वो करो करके. भाई देखो कल क्या होगा मेरे को नहीं मालूम. लेकिन 10 साल के बाद मेरे मालूम है mid, small and large, all three will deliver the same number. आप लास्ट 15 साल का कर लो. 9%, 10%, 8%. I'll tell you exact number. 15 years return. 8% index. 9% index. 10% for mid cap and 8% again for small cap. This is a 15-year number. Go and check. But last 6 months, 1 year, is mind-blowing. Like index has done 8%, mid and small have done 20%. So that excitement brings all the crowd into following. In fact, after 20% return, you should run from there and go to the large cap. Because large cap is going to do that next 20%. Not this, see, अनुलोम विलोम होता है ना, तो पहले आप इसके ऊपर can you breathe further? You have to first release.
Breathe out, yes.
So now mid cap and small cap had their breathing up. Now they have to breathe down. Large cap had done their breathing down. They have to breathe up. अब लेकिन बोलने में बहुत इजी लगता है हमको, लेकिन करने का जो है ना shifting the allocation there or sitting there is tough. So people who have patience, they will reap the benefits.
That's a very interesting point that you made. You are feeling that froth in the mid and small caps, and I only ask because, every day there is a new IPO. The market is broadening.
Yes.
The small and mid cap space itself is getting so bloated.
Yes.
There are newer opportunities every day. So why would you say that this is the peak of mid and small caps
I'm
in the
not,
near
I'm,
term?
you
in the
said,
near term?
I didn't say it is peak of mid and small cap. Who said that? There will be huge opportunity. It's of 3,000 companies, 4,000. If there are 3,000 companies listed, only 250 are the large cap. 100, 150 are large cap. Rest all तो आपका पूरा game ही mid and small का है. So the opportunity is very large.
Sure.
But when you say that the return from the category is 20-25%, then buying at those level, you have to be
Obviously,
very, you need more
cautious,
care.
yes.
Because generally valuations are high. in that segment. And generally valuations are cheaper here. So, and then Indian story is such that large cap is actually globally a mid cap. And जितने आप mid cap बोलते हैं, they are micro cap. They are flies. And so, what you call large caps, they can, when the economy is growing at 10%, you need muscle.
Yeah.
You need muscle to stand
the
before the
size,
regulator,
the
before the
stamina.
government,
Yeah.
before the lender, before the consumer. It's a large country. You need to open 10,000 shops. I mean, you can't do with 5 shops, 10 shops. The real fun is to see a tsunami of opportunities there. Who will benefit, you tell me? The guy who has the largest container or largest spread. And large spread is not there with the mid and small. They are regional, they are state level. They look very nice when they are small. When the moment they become big, it's not necessary that they'll do. They remain small because they have some mindset issue. And the companies have become large because they deserve to be large cap. And those companies, they will benefit big time in this consolidating economy and growing economy. So, a large cap opportunity is stunning, and they'll make tons of money. Maybe it is not popular what I'm saying, but
you
see,
know, I'll
but
tell you
investing
why.
is yawning.
Sure, of course.
Investing
it's
is
the
very
most
boring,
thing.
very boring thing.
Oh, very boring thing. Yeah.
But investing in, your mid and small
Yeah.
is very exciting.
Thrilling,
Every day,
yeah.
10% up, 10% down.
Yeah.
So large companies will move very slowly, but steadily they'll move up.
The other space, where you're seeing massive boom, and we can see that living in Mumbai, construction, infrastructure, realty, I mean, 5 minutes, what it takes you to commute anywhere now takes you almost half an hour sometimes. We can see that in front of our eyes. But these stocks have also done very well. It's a very well-discovered theme. Is it a multi-year theme, you think?
Yeah, see, typically housing boom and infra boom. Housing is by the private household, and infra is by
Government.
government. These two, first thing is infra, typically government can outspend itself. They can create deficit and outspend.
True.
So that's a national priority. And we have infrastructure
And we have
deficit.
elections coming.
No,
Yeah.
not election. Long term, this country is headed to build its infrastructure, because if you see the difference between us and Dubai or some other country,
China,
it is the infrastructure. So if the government has money, if any prosperity comes, they get tax collections, they have to spend on infra. Otherwise, they'll be booted out of the office. They'll be booted out, let me tell you. Second, at a household level, you always aspire to live in a bigger and better house. So that boom is also on. Both the booms have a huge trickle-down effect. You imagine one bridge or something gets built, or building like this builds. I mean, how many guys they get a job? How much of the materials are being consumed? So that is what is happening now. So as the boom picks up, I mean, this is just about COVID first recovery, and now we are seeing the companies doing better than pre-COVID level. It's just about the first year. I think we have a 10-year journey or 12-year journey. I don't know where it stops, but I see a very bright future for the economy driven by infrastructure and realty. And realty is typically, they had a lost decade. They literally were the bankrupt. I mean, nobody wanted to touch them, but now they are looking to be the real driver of the economy at this point of time.
And the other good thing is that it's such a large base that infrastructure and realty creates. I mean, everything from bricks to cement to, electricals to wiring, everything.
Yeah, everything. I mean, you need a whole lot. I mean, housing expenditure is the main. I mean, people spend their life to build a house. So I think that bulky opportunity is there, and how it plays out, it may surprise you, but it will be very, very. I mean, I think it is a very exciting time.
What, according to you, is the best way to capture infrastructure realty boom, sector-wise?
I think the best way is to find, passive opportunities there. I mean, an index made up of those companies, and now NSE and a whole lot of index offerers, they have a lot of these things. So you don't have to break your head whether to buy Loda, whether to buy DLF, whether to buy this, that. I think they'll all put together there, and whosoever does well, you'll benefit.
You benefit. Yeah.
So I think this is a time to bet on to the sector level kind of a bets to some extent.
That reminds me, I must ask you about defense and railways, because the market is so divided about whether we've gone ahead and, have the stocks already moved ahead of what the opportunity actually in reality is. What do you feel?
See, some of the businesses are very good. Some of the companies are also very uniquely positioned, monopolistic condition. They have asset light. They have unique, IPRs with them, and government cannot do without them. And in that side, there's a lot of build-up like defense and all. I think there is a long-term trend to allocate more for the this thing, build up defense, and these defense companies are monopolistic. Though they are private public sector, so there is a little bit of challenge in terms of, but the well-run public sector, monopolistic, high return on capital and all, and their dividend policy is better than private sector. So I think you have an opportunity there, but now they're not no more like 2 years back the kind of valuation you had. वहाँ से काफी ये होगा. So you have to be a little more careful which ones you are doing, where is the action. So you have to understand company wise.
Similar view on railways?
Yes, everywhere. Wherever things have gone 2, 3x, 4x, 5x, you have to be, I mean, I'm not saying, see, public opinion also matters. That something big is going to happen here.
Yeah.
So is it something very big going to happen and we have ignored? Or is it flash in the pan and it's just now it's speculative and nothing is going to happen? But I'm very bullish on the Indian economy, total tax collection by government. I mean, under the current regime, I'm saying if it continues, I'm very bullish on the tax collection, and also I'm a bullish that the incremental tax collection, very disproportionate portion is going to get into defense, infrastructure build-up, railway is an integral part of. So, abhi to, you know that last year was 12 lakh crores ka total capex announcement. My sense is next year it will be more like 14, 15 lakhs. So we have not executed 12 only. What happens on top of it, then this comes. So we have to see how this exponential build-up of the book and execution, how good is the execution machine? See, now it will all come to execution machine. So underlying business, whether once they get the order, once they get the advances, can they execute?
The other big theme I think which will play out, and please tell me your views here, is I think energy transition also.
Oh, that's going to be huge, and it's a decadal, multi-decade kind of a trend, multi-decade trend. And yes, I mean,
but opportunities are few within the listed units?
No. That's where one has to understand. I mean, in the front you might see one Suzlon or one Inox or this, that. But I think underlying, there are a whole lot of companies which are supplying beyond them, beyond them. Because the whole architecture, transmission, I mean, it's going to be different because it's a very distributed. You know, when you set up a, say, 5,000 or 10,000 megawatt, say, thermal plant, the whole damn thing is reduced there. Coal is reduced or uranium is reduced and power flows from there. So you need one type of architecture. Here, you know, you have a 30 megawatt here, 100 megawatt, because the dilution of the thing is very high in the sense that PLFs are 25-30%. So what they say 1000 megawatt, actually it is 250-300 megawatt. So for 5000 megawatt, which is one side, here you need maybe a full city to be covered for, so it's very diluted kind of thing. So for that, the kind of architecture you do, the kind of cables are needed, the kind of transformer, there is a complete boom in transformer demand. Because from renewable energy, you have to step up for uploading into the thing, you have to step up, and after it is transmitted, you have to download and again step down. So I think step up transformers and all. So I'm not master of this, but there are a lot of components. It's a multi-decadal kind of a trend.
What brings you smile other than listening to music? Is it making money for people?
Making money for people, meeting friends, generally being good health. See, one of the most important things is you don't have any problem. But there is no headache, there is no nothing. That is the first thing. Boss, God, thanks. You know, I'm healthy. Health. If I eat dosa, I enjoy eating dosa. If I have a filter coffee,
I
enjoy.
Are you a foodie?
I love food. I love food. I mean, so I love food, sweets. So in a calibrated fashion.
Of course.
So, you know, you should be able to enjoy every moment of life. If I'm doing interview, I should enjoy this. Next I'm meeting, as I said, daughter-in-law, I'll enjoy that.
Be in the moment.
Yeah, be in that moment and I mean, get engaged with the person with whom you're talking.
Yeah.
I mean, one is that, yaar, ye karna hai, chalo yaar. And
Mare man se mat karo. If you're there, if you're doing it, do it properly.
Yeah, so
give it 100%.
live whatever 12, 13, 14 hours what I get. I try to get best out of it. In the evening when I'm going back in my car, I try to see how was the day. I review for myself.
Reflect.
You know, and you feel happy if you've done something contributed to the larger cause, or you have insights about some big trends or big company or something.
That gives you a thrill.
Yeah.
Absolutely. Chaliye, so much to learn from you. It always is a learning talking to you. Thank you so much for taking the time.
It is a pleasure talking to you. And,
thank you.
And let me wish again.
Yes.
Very happy Diwali, very prosperous New Year.
And healthy.
And healthy, wealthy, and wonderful time, you know.
Yes.
Wonderful time ahead. Not only for a year, for decades.
Absolutely. And I can feel the positivity in your voice. Thank you. Thank you so much.